write down to internalize.
Yeah. Hi everyone, good morning. In 2016, we crossed an important milestone of $10 billion in revenue during the calendar year, so the last 12 months. Praveen told me that in 2004, we crossed $1 billion in revenue, and then $2 billion in 2006, right, Ranga and Praveen? And when I started, I remember we were just above 8 billion. So that 10 billion number is something that all Infosys and all our stakeholders and clients should celebrate. We had good performance in Q3, considering that when we entered Q3, we were facing both the traditional seasonal headwinds from less number of working days and furloughs, as well as the one-time impact that we had expected from RBS despite that, and we had 1%, a little bit more than 1% impact from RBS. Despite that, we delivered Q3 revenues of just a little bit below flat, minus 0.3% in constant currency. We improved our margin performance thanks to the efforts of our teams, especially Ranga, which I am very proud of, and to deliver operating margin of 25.1%. Utilization was at 81.9%. That is the highest Q3 utilization in many years, and consistently now for the 7th quarter in a row, utilization above 80%. And then in the new areas, we had strong growth. All 4 of our new dimensions in software-led services, Mana, Scava, Panaya, and Edge, had their best quarters ever. And Mana client adoption has continued to double quarter on quarter. So we are seeing good growth on all fronts. As we enter Q4, we are optimistic about Q4. We have raised our guidance on constant currency terms to 8.4 to 8.8% for the year, based on the outlook that we see presently. One significant thing that we saw in this quarter was the continued pricing pressure. RPP, the revenue productivity per employee, declined 1.1% on constant currency quarter on quarter, 1.7% for the first 9 months of the year, and 3.3% year on year for Q3, which tells us that this downward steady pricing pressure is something that is here to stay, and it's a reality for our industry, as I have been saying for the last 2.5 years. And despite that, our revenue per employee at the company level went up to $51.9 thousand. This is a result of a strong focus on automation, strong focus on operational efficiency, led by Ravi and his team, as well as agility in our hiring and how we have managed that. Overall, I'm happy with the performance for the first 9 months of the year, despite the seasonal circumstances that we have seen. So we did on year-on-year basis for the first 9 months of the year, that is 9.4% improvement on constant currency. So that is something that I'm excited about. And over the course of the quarter, we also saw that our customer satisfaction has increased significantly. In fact, the customer satisfaction scores are at the highest level ever since we started the customer satisfaction survey 12 years ago. So that is something that all our employees are proud of, and it reflects our endeavor to execute on our strategy to bring innovation into every dimension of our operations, to make innovation a way of life for everyone inside Infosys. Strong adoption of zero distance, and zero distance itself has become quite a significant movement, part of all dimensions of our company, both from a revenue driving perspective as well as just elevating the confidence, the creative confidence of our employees. As I look to the future, an increasingly AI-led future, this embrace of AI in improving our operational efficiency and automation, as well as new AI-led solutions for all industries, is something that is going to be crucial to our future, and that is going to require the best of the imagination of all of us, and that is something that I am glad to see the markers of progress on all of these fronts.
Good morning, gentlemen, and Happy New Year. Vishal, just to get your thoughts on, you just conducted a survey of all your clients. What is the kind of client behavior changes that you have seen post Trump's victory? And do you see that that's going to impact the Indian IT companies and companies like you who are working extensively in the US? And for Ranga, the margins have gone up by 2 basis points. Can you give us a idea of, is there further scope for expansion of margin as we go forward? And since Vishal was talking about RPC going down by 1%, what are the levers available at your hand to ensure that you are able to stem that fall in RPC, because that's going to be a critical factor going forward, and impact of cross currency changes, which is there.
So in terms of the new administration, the new president is going to take office next week, and overall I expect that the President-elect Trump is himself an entrepreneur and a very business-friendly, innovation-oriented, has an innovation-oriented background. So I expect that the policies of the administration are going to be friendly towards business and innovation and entrepreneurship. So overall, I expect that if we can continue to focus on delivering that value, that innovation, things will be okay. Of course, visa policies and immigration-related policies may change, and we have to watch and see what happens there. So far, there is no discernible pattern in client behavior. Many clients have reached out to because everybody is trying to figure out what these things mean and so forth. And but I wouldn't say that there is any noticeable discernible pattern. So as we see the policies take effect and so forth, of course, we will let you know. We are what is it called? We are waiting and
watchful mode.
Watchful mode. Yeah, we are waiting and watching.
Hi, on the margin front, this has been a positive quarter. If you look at the operating margin, it expanded to 25.1, which is the highest in this year. Likewise, the net margin also expanded by 60 basis points to 21.5. So I think overall on the margin front, even if you look at the 9 months over 9 months, this year it was 24.7, pretty much same as last year's, despite the lower revenue growth. I think on the margin front, as you were saying, well, yes, even in this 9 months, if you look at year on year, the price in decline was 1.7% in constant currency. So despite that, we are able to kind of maintain the margin at the same level as last year. In October, we had clearly said that our operating margin range for this year would be 24 to 25. So we're pretty much at the higher end of that particular band as of now. So coming to the levers that you talked about, we have multiple levers that we have kind of continuously utilized over the last 7 quarters. For example, utilization consistently above 80%. This quarter also, despite the RBS headwinds, typically, it brings down the utilization lower in a seasonally soft quarter. So we have been able to keep a healthy utilization. Then if you look at the on-site employee cost as a percentage of revenue has come down this quarter. Likewise, on subcontractor costs, we have stabilized around 5.4, 5.6 range. Likewise, these are particular levers that we have utilized in the past, and we continue to optimize those levers. At the same time, there is one more lever which has not improved much, which is the on-site mix, which is still at 29.8, and we do believe that we need to work on it, and we will work on improving that lever as well. So, overall, in spite of the pricing decline of 1.7% in constant currency over 9 months, we have been able to keep the margin, and the margin has expanded this quarter. And most importantly, the operating cash flow has been very healthy. It is at 100% of the net profit.
Happy New Year, gentlemen. Rukmini Rao from CNBC TV 18. Vishal, want to understand from you in terms of the noise around H-1B visa. How big a headache is that for Infosys at this point in time? And also, you've crossed the 10 billion mark run rate. So, in terms of your aspirational 2020 goal, do you think that this is making it look much achievable at this point in time? And also, Praveen, just want to understand from you the next growth wave. Where is that coming from, given the fact that most of your businesses and also services, they're either doing flat or marginally well? And Ranga, also in terms of the currency movement, just want to understand from you, is there any game plan that you have currently? And last question, Vishal, the management change that we've seen, bringing in Ravi Kumar as the Deputy COO, is there a larger game plan? Are there going to be more management changes going into FY18?
Sure. So, wow, there were lots of questions, Rukmini. I think first of all, what was your first question?
On visa.
The visas, yeah. See, we have quite a bit of H-1Bs, and we also have lots of local hires. And Ravi has been working furiously in the last few months to do something that we had, as you remember, 2.5 years ago when I joined, I had articulated anyway that we have to become much more local and locally oriented in our strategy in the markets and globally. I am myself a senior local hire in the United States and a US citizen. So ultimately, regardless of the visa policies and so forth, the right thing to do for innovation is to have a lot of rich local talent. That's something that Infosys always believed in, and is something that we are absolutely committed to. So there will be some impact of the H-1B depending on the nature of the policy and so forth that is enacted. There can be, but it is something that we'll let you know when we figure it out, and it is not something that we are overly concerned about. Regardless, we have to focus on next generation collaboration technologies. Sanjay, our head of design, has been working on a next generation visa-free global delivery model, where we bring collaborative technologies to bear in creating a rich experience for people to work together in new kinds of workspaces and so forth. So that is I think the bigger view on that. In terms of the crossing the 10 billion, that is a huge emotional, psychological milestone for us. And yes, of course, our aspiration continues to be 20 billion, 30% margin, and $80,000 revenue per employee. And that is something that we are absolutely working hard towards. And what good is an aspirational goal if it is not aspirational?
Okay, on the growth perspective, Q3 is a seasonally weak quarter, so I don't think we should read too much into individual service line or geo-wise growth. I mean, if you look at financial services, despite the headwinds of RBS, we have seen on a constant currency basis 0.2% growth. So the pipeline is healthy in financial services, so we expect that to continue going forward into Q4 and next year. Manufacturing seasonally, because of furloughs and other things, we have seen about 0.6% decline on a constant currency basis, but it's expected to kick back. And within manufacturing, we are seeing good traction in auto. High tech, we had a challenge this quarter, but next quarter we hope that it will bounce back. Aerospace is probably the only one which is a bit challenged. When you look at retail and CPG, retail continues to be volatile. So we will see some ups and downs in retail because it's tightly linked to consumer spending, consumer sentiments, and so on. But on the life sciences side, we have seen some good growth this quarter. We expect it to continue. If at all anything, in my mind, energy is probably the only one which is probably relatively soft. Otherwise, While this quarter we have seen some degrowth even in telecom, but going forward, I think barring energy, we expect most of the sectors to bounce back.
So on the margin front question, clearly this quarter both the operating margin has been positive, net margin has increased, as well as the operating cash flow. Operating cash flow has been 100% of our PAT. So I think even if you look at the 9 months, over 9 months, the margin, the operating margin at 24.7 has been steady despite the reduced revenue growth. Coming to the foreign currency question that you had, well, sequentially, I think the foreign currency fluctuations impacted around 1.1%. That's the difference between the constant currency and the reported. If you look at this particular quarter, there has been extreme volatility in all the currencies. USD especially appreciated very strongly, over 5% on GBP, close to 5.8% in Euro, and even on Australian dollar. But we have consistently used our hedging, as our hedging policy has been very consistent. This has helped us to navigate this extremely volatile currency environment much more effectively. And we'll continue to watch. I think in the near term, we do see certain volatility continue both on the rupee front as well as the US dollar and the other cross currencies. We'll continue to monitor that.
And Rukmini, on your last question about the organization, of course, there will continue to be changes. There is no particular grand plan. We are very, I mean, Ravi is just amazing. He's an extraordinary colleague, and if you just look at our scale that we operate at now, it is massive, more than $10 billion run rate, and thanks to all the efforts of everyone. So Praveen and I need more bandwidth, and Praveen told me that with now Ravi being deputy CEO, I have to stop calling him after 10 o'clock at night. And so, so for sure there will be more changes, but there isn't any particular grand plan. You know, Steve Jobs used to say that you can only connect the dots looking backward. So I deeply believe in that, and we say things as we see them, and we take decisions as we go forward. That is the hallmark of an agile organization.
Hi everyone, Chandra from ET Now.
Hey Chandra.
Vishal, a couple of quick questions. You know, the TCS management yesterday spoke about how US BFS is looking up now that, you know, the elections are out of the way and they expect clients to spend more going forward. Do you see similar trends as well, though this quarter it hasn't done too well? And also your quick comment on N. Chandra taking charge of Tata Sons, because everybody is saying this is advantage Infosys in the near term. Praveen, a follow-up on Ravi Kumar. Does this mean that, you know, gradually he will transition to the COO role? How long are you going to stay on? And Ranga, a lot of analysts expected a buyback announcement this quarter because a lot of companies see it as very tax efficient. Is this on the cards at all for Infosys? Thank you.
Wow. What was the first question, Chandra? So all BFS is looking up simply because I have tremendous confidence in Mohit's amazing leadership ability, and he has, if you look at our BFSI performance and now also healthcare, that is his responsibility, it has done exceedingly well. Despite this RBS impact of more than 1% on the company level, our BFS still grew in Q3, so that is we are very confident. I think generally we expect that the shift of spending in BFS will move from a more regulatory oriented and cost oriented approach in the prior times to now certainly in the North American market with President Trump coming in towards a more innovation oriented and lower latency, new technologies, new kinds of growth areas and so forth, and banks will focus on those. So I am confident. Mohit would normally say cautiously optimistic, but I am very optimistic about the BFSI and our prospects there. And in terms of Chandra becoming the chairman, I wrote him yesterday congratulating him on the great, it is a reflection both of his amazing leadership and capabilities, as well as the growing importance of software in the world around us. So, you know, all the best to him, and we wish him the very best in that journey.
Yeah. See, on Ravi, as Vishal said, I mean, basically he has done exceedingly well, and historically, we had a lot more senior bandwidth based out of India, and our businesses continue to grow and be much more complex. So we needed more bandwidth here, and so that's the primary reason.
And Jayesh, Jayesh has a deputy CFO to Ranga,
Yeah.
and so Praveen has now a deputy with Ravi. So this is how we are setting it up.
Anyway, I'm not in a hurry to retire or anything. Still a long way to go.
No, I will not let Praveen retire anytime soon.
On the other question, Chandra, on the capital allocation policy, if you look at in April 2015, the board had evaluated the capital allocation policy about 2 years ago. And at that point in time, the dividend payout was increased from 40% of profits to 50% of profit. If you look at today, at 50% of net profits, it almost works out to over 70% of the free cash flow. Yes, the board periodically evaluates the capital allocation policy after taking into account the strategic cash needs, the operational cash needs, and evaluate all options. And I think the board will will consider at an appropriate time the capital allocation policy. So it was done in 2015 April.
So is this the time, an appropriate time?
I think it's board will consider periodically, and it will look at what is the appropriate time to consider.
The board members are right next to you.
Maya Sharma from NDTV.
Hi.
President Trump about to take over. The world is waiting with bated breath to see what he does next. And of course, IT companies, including Infosys, a huge presence in the United States. With all the fears of the visas, with the stress on American jobs like your own, what really is Infosys thinking about the presidency going ahead? Is it cautiously optimistic? Is it fearful? Or what is the real term?
No, as I said, if you look at the career of President-elect Donald Trump, it is a career based on innovation, entrepreneurship, business success. So I expect that and if you look at some of the indications that we have seen in the last couple of months, it all points to a more business-friendly, innovation-friendly at a general level. So therefore, if we focus our long-term strategy towards continuing to deliver client value, to not be focused so much on cost-based delivery of value, but on innovation-oriented delivery of value, and are relevant to the client's business and growth, especially in these difficult times of our clients transitioning to digital, will be fine. And there will be changes we expect that there will be changes to the H-1B policy and so forth, and there can be impact from that depending on what the kind of policy is that is put into place. So we'll address that as we understand it better once it is in place. But in general, my direction, Praveen's direction to our company is basically to continue to focus on becoming more and more relevant strategically to our clients and to be looking forward, not backwards.
So overall, his business-friendly approach may overrule the apparent anti-outsider feeling that he generates.
Yes.
Thank you.
Hello, Madhu from BTVI. Why are you changing guidance every quarter? There was an upgrade, then downgrade, now narrowing down to the guidance.
Ranga, you want to?
No, actually, let me correct that. Every year we give an annual guidance based on what is the visibility we have at that point in time. If you look at not just us, some of our peers also have kind of assessed the guidance at the end of every quarter based on what they see, and they have revised the guidance downwards or upwards as the case may be. So this is not something unique to us. Our peers do it, and we have done it in the past, and it is primarily based on setting an expectation based on what we believe as a management team at that point in time and what we see in the markets at this point in time. We do believe that transparency is important, that asymmetry between the external world and what the management knows is important, and we have consistently followed this policy since we got listed in 1993. I think there is no deviation of this transparent policy.
Thank you, gentlemen.
Start off with the geography-wise growth. It's been largely flattish. I mean, Europe has grown 1% Q on Q. US is down 0.6%. Rest of the world minus 1.5. Quarter on quarter in constant currency terms. So, is this related to the seasonality factor, the Trump factor, or a combination of all of these? And a similar trend is also witnessed in BFSI and other key verticals. And we had Praveen mention that manufacturing, and within manufacturing, high tech is an area of concern. So if you could just articulate your views on that. Thank you.
Maybe we can go
Maybe
vertical.
you can cover with the US piece.
Yeah, so I mean, quickly in Americas, this is a seasonally weak quarter for the entire industry. If I specifically look at trends in America, consumer spending is up. We saw first data come out with data around holiday spending, which was up 4.7%. Manufacturing overall momentum is up. The Institute of Supply Management said that manufacturing activity is up 2% year on year. So the fundamentals of the economy are very good. But it's a holiday quarter. There are holiday shutdowns. There are furloughs in many industries. High tech, for example, what Praveen mentioned, did have massive furloughs. There is some fundamental disruption going on to business models as well. As software companies are becoming more on-premise, SaaS companies from on-premise companies, their margin structure is going down, which means we who service them as suppliers have to figure out a low-cost model. The two pillars around automation and innovation is affecting every industry, right, from BFSI to retail to services to energy. So I don't see any major cause for concern. This is a seasonal quarter as such. Almost all industries in all geographies are flat. And I expect the fundamentals of the economy to be strong, Q4 to be, moving forward as well, nothing disturbing to see, and we should see the pipeline return both in terms of large deals, licenses, new, renew, etc. So that's what I see on Americas. Europe.
I think I'll let Rajesh cover Europe, but I'll just talk a little bit about the financial services piece. And as both Vishal and Praveen mentioned, right, we're actually very happy with the performance we had in BFSI this quarter. Despite the very strong headwind that we had from the known ramp down in Williams and Glenn, we were able to defend our revenue very successfully. If you look at the Williams and Glenn impact, it was about 1% of the company level, and that magnified to over 3% of the BFSI level. And despite that, we were able to defend the revenue number. And I think that's largely because on the back of a lot of wins, right, and a lot of organic growth. So, working along with Sandeep's teams, we had 3 Mana-led wins in BFSI. We've started work on data as a service for one of our European banking clients. We're working with one of our global clients on their Latin America tech transformation. So, on the back of large deal wins, organic growth, and win in the new, we're extremely happy with the performance that we have in BFSI, and we're very optimistic about the the opportunities that we have in Q4. As Vishal mentioned, the key theme that we're seeing across industries, right, is clearly AI. Right, AI is the #1 trend that we're seeing. It really lies at the intersection of a huge number of technology trends, right? So if you look at it, if you look at natural language processing, if you look at data science, if you look at IoT, if you look at blockchain, AI really lies at the convergence of these technologies. And it is going to be extremely important to the future of financial services. And it is something where I believe that we have a leadership position. So if you take our strengths and if you take where the market is headed, if you take our historical performance, I feel that there are reasons to be optimistic about our performance in Q4 and beyond.
From a Europe perspective, I think this was a good quarter. This is, as Sandeep pointed out, seasonally soft quarter. Of course, we saw massive currency movements. Ranga was talking about that earlier, massive depreciation of both the pound and the euro. But in constant currency terms, Europe has done quite well. We expanded about 1%. But more importantly, I think even though we have seen a fair amount of political turmoil in Europe in general, we had the big Brexit issue which was a few months ago. We've got elections coming up in 2 very large economies this year. But we are very optimistic because the pipeline which we have currently in Europe is one of the strongest we've ever seen. and especially financial services has done exceedingly well in Europe as well, and we are also seeing good traction in telecom and certain other industries, even manufacturing. So overall, we're quite very optimistic about the European performance.
Just a follow-up question on that. Could you quantify the demand pipeline for Europe? And as far as India is concerned, is the sluggishness that we are seeing anyway related to the entire demonetization episode? Thank you.
So, I don't think that the India revenue performance has anything to do with demonetization. Obviously there is a project pipeline that they're working on, and based on how we recognize revenue in a particular quarter, there are ups and downs. I don't think it has anything to do with demonetization. As far as the Europe pipeline is concerned, I'll let Rajesh and Sandeep add to it. But we really typically don't break out pipeline, quantify pipeline across various geographies or industries. The overall trend is important because the overall performance is very good. You spoke about the ROW performance as well. And again, because so much of this gets impacted by currencies, right? If you look at ROW minus India performance on a year-on-year basis, that business grew by close to 14.5%. So it's very strong performance on a year-on-year basis.
Yeah, and I don't see any deviation in pipeline between Europe and Americas. Right now, our pipeline across verticals, across geographies is very strong, and across service lines, whether it's large deals, new deals, AI-led deals that Mohit was talking about, new digital experiences, analytics, and so on. So I see the pipeline being very robust across geographies, across verticals, and across service lines.
Okay. Hi, gentlemen. Rahul Dayama from ET Now. Mohit, firstly coming to you, your CEO seemed very optimistic about the BFSI vertical. Would you echo the similar sentiment? And also, give us a sense of the impact of the RBS account really.
Sure. So, Vishal often jokes with me that I'm always cautiously optimistic. And he expressed a great deal of confidence in the future that we see from a Q4 perspective and beyond. And I echo that. I think Q3 was a test of resilience for us as a company and for a financial services unit. The fact that we've been able to sustain revenue performance despite a 1% impact at the company level because of RBS, and obviously that impact is magnified at an FS level, speaks to the resilience. And given the fact that that we are very strong in the areas where our clients are focused, which is AI, which is automation, which is infrastructure transformation using cloud technologies, it's open APIs, and given the fact that the overall spend environment, especially from a US perspective, does look better for the next 12 months. Given these two factors together, I echo his optimism.
Okay. Questions to three of you now. Sandeep, we've spoken a lot about the impact of visa implications. It's sort of a wait and watch policy. But give us a sense of on the ground as far as your conversations with clients are concerned, previous to the election and post the election. Are you seeing some sort of, what's it like post and pre? And also give us, as far as the pipeline for manufacturing and retail is concerned, how is that panning out? And I'll just, Ravi, firstly, congratulations on the elevation. Give us a sense of how will this pan out, in terms of responsibilities between Praveen and you. And also we understand now you would be based out of India. And lastly, as far as Europe is concerned, are we behind as far as the worst of Brexit implications from the client conversations that you're having? You spoke about how the pipeline really is very robust for the coming quarters. So are the fears of Brexit over, so to say? Thank you.
So in terms of client conversations pre and post-Trump's election, I don't think there has been any significant concern across clients. There's obviously two sentiments there. One is, how will the policies be vis-a-vis IT services? But the other sentiment is also in terms of his business friendliness, his innovation friendliness, etc. And so both of them basically balance each other out. We, on the other hand, regardless of that process, have been investing heavily in local hiring. We're investing heavily in automation, more collaboration, and new delivery models aggressively. That process is important for us. We're watching legislation very, very closely, as we always have. These things take time, but we are prepared with our plans regardless of this happening. I think the larger trend here is that through the process, pre and post-Trump election, clients were accelerating their focus on automation and AI anyways. and we're going away and are gradually continuing to go away from a people only model to a people plus software model. On that paradigm, as Mohit has earlier said, we seem to be the best placed given our capabilities, given our investments, given our priorities. I think that will be the overarching winning factor here in the future.
Yeah, so thank you for the question. So as you know, a couple of years ago, we created a global delivery organization, which was very central to the strategy of the company. So that remains a part of my responsibility. I continue to shoulder that responsibility. There would be a few enabling functions which will be attached to it, and those are strategic ones which have dependencies of the core delivery function. So it's always a pleasure to take more responsibilities and be a part of this wonderful cooperation and support Praveen most importantly. We do quite a bit in India, so it's extremely important that we kind of distribute our leadership bandwidth. We have client visits, we have a whole bunch of operating metrics which we continue to optimize and keep our ship very sleek so that we could invest back into the business. You've seen our profitability numbers, you've seen our operating metrics. In fact, our utilization this quarter in the last 10 years, if you could just compare Q3, it's been one of the highest. So that's a journey. Our journey is to continue to keep sharpening our operating metrics, continue to support the sales functions, improve our service line competitiveness so that we kind of build that to the future. Sandeep spoke about automation. That's a huge lever in our journey. So all of these, I would think, would be the part of the responsibility I was otherwise working on, and we just bolted on with more enabling functions to support this process.
Rajesh?
I think it's too early to call and say whether the fears of Brexit are the thing of the past. I think we had some very interesting distraction which came from the other side of the pond, and that's why the noise on Brexit has reduced. But I think the journey ahead is long. It is not an easy process. There are a lot of things which have to fall in place. I think clearly organizations and companies who are going to be impacted by this have started creating plans. The good news is we have a long way forward, and there is enough time to plan those things, and we as a company also are taking our own measures. We also have two very important elections coming up in Europe this year, and so again there will be more distractions. So I think the reality is that the path is not very clear, and the separation, if and when it happens, is also not very clear. So I think right now I think we've not really seen. Of course, we've had the impact which Mohit has seen because of RBS, but beyond that, the impact has not been significant.
Ravi, Adit again from CNBC TV 18. We've seen a marginal dip in the overall headcount from over the last 3 months. I think the headcount number has come down by about 66. Again, is this a seasonal thing, or is this the impact of machine learning and automation, everything coming together?
Yeah. So a small part of it is seasonal, but what you would notice is the number of headcount we've added. Just looking at Q3 year on year, we have improved significantly. What I really mean is we have kind of added lesser headcount than similar quarters of the past. Clearly, there is more release of people from production projects because of automation, so that they could be used for more meaningful work. Our journey of moving from a people to a software plus people endeavor, I think, is kicking in, and our clients are actually really leveraging that opportunity. As Mohit earlier spoke about, we are a leader in this space. I think we want to cannibalize our own services as much as we can so that we could add value to the client ecosystem, and therefore the money is actually diverted to more meaningful purposes. So clearly that is a trend. We're seeing more releases of people. We are seeing more productivity baked into large deals. We are seeing automation, the span of automation, which was just focused on application maintenance,
is now expanding into application development, L3 kind of work, more judgmental tasks in the life cycle of large projects. So this is going to be a reality. It's going to be mainstream. It's going to be table stakes to be in this business. If we are not accepting and acknowledging that, we are going to get obsolete, as an industry. So we are very, very keen to adapt it, cannibalize ourselves, be bold, tell our clients that this is very important for them, very important for us, and bite it. But what happens is capital gets reinvested into newer purposes, and that's our entire value proposition. We want to renew existing landscapes, divert that capital to newer purposes where you could invest into digital, invest into cloud, invest into newer areas.
But are the redeployments happening at the same pace as
they
the
are,
releases?
They are, and that's the utilization is a great indication. In spite of the fact that we have released, we released 26 to 2,700 people this quarter, just based on automation and applying automation to our services. But our utilization is just you take Q3 and compare it with Q3 year on year, it's been on an all-time high. And it's a big leap from the previous quarters in terms of previous Q3, similar quarter of the previous years. And that's a great indication of not just operational efficiencies, but also the fact that we are applying automation far well and actually redeploying people for higher value added jobs, if I may.
Hi, good morning, gentlemen. Happy New Year to you. This is Sajid here from Bloomberg Quint. Just want to get an idea of how's the retail space doing, because that was a struggling space in the last 2 quarters, and a lot of automation was going into that sector as well. And if you can give us an idea of how the BFSI space is doing with respect to some of your products, and as automation kicks in, what kind of leverages you are able to get from in terms of margins.
Yeah, so I'll take retail first. So retail CPG, let's look at the macro first. We've had a great holiday spending season in the US. Reports are that it grew 4.7% year on year. If you double click on that, about 22% of that spending went through e-commerce, which is an unprecedented high. So e-commerce has grown 12% year on year. Then if you double click further on that, bricks and mortar retailers have grown by about 1.6% year on year. Department stores are getting obsolete in terms of store closings in a massive way. So there's more store shutdowns now per month than ever before, both across Americas and Europe. However, electronics retailers or general merchandise retailers are doing generally better than others. Now, how does that translate to us? It's become very clear to us, and if you can see our press release today, you have a couple of retailers choosing us for our AI-led, automation-led support and maintenance work, because they're trying to cut costs dramatically and drive automation dramatically. Then there are CPG companies who have chosen our Scava platform aggressively for a direct-to-consumer strategy. They are removing the retailer in their path to the consumer and directly developing a relationship to the consumer, which means that perhaps retail and CPG, I'm using the broader industry term, is the first to go through a massive disruption, a digital disruption. So despite the headline of growth, that disruption is key. How is Infosys done in that? If you look at Q1, we grew this vertical at about 5.5% and gathered more incremental revenue from the market than perhaps any other competitor in the space. Q2 was an okay quarter for us, but then Q3 now is a flat quarter, and this is perhaps one of the better Q3s we've had in this vertical, which is normally a negative Q3 due to holiday shutdowns, furloughs, etc. in retail CPG. So if you take the last 9 months put together and compare incremental market share captured, I think we've done a phenomenal job. Year-on-year growth rates for us in this vertical has been above company average. So we've seen a dramatic shift in spend here, and the spend is going towards Scava, which is our digital retail CPG platform, related digital services in the digital practice that Ravi runs. Second, towards AI and Mana, so they're solving core machine learning based business process problems and transforming their processes. Third, towards robotic process automation, we have a world-class product called Assist Edge that a number of retail and CPG companies are adopting. So I feel very comfortable with the way we are investing in digital technologies, in new technologies, in automation, in AI, as we go towards Q4 and for that matter FY18, confident that regardless of where the macro indicators go, we are positioned well as a leader to capture market share in this industry.
Are you seeing the industry going to to an omni-channel route, which I think we're seeing gradually happening in India as well at some point with some of the retailers? Are you seeing the same thing happening there as well, or the industry has gone over that route already there?
Well, it's a dramatic change, as you rightly pointed out, and it's happening across the world. Primarily the Amazonification of this industry, but it's clear that the basket sizes are much higher if, as a consumer, you go through the online website, the mobile app, and the in-store experience of a retailer. So Amazon, in fact, is launching physical stores now, as you can see, that because they're also trying to become a differentiated omni-channel retailer. So yes, the answer is yes, this is happening, and we feel that we're very well positioned, because if you see Scava, one of our leading products, it has had as many in-store deployments of kiosks as it has had in mobile applications or in e-commerce. That shows that we have not just are investing in an online platform, we are investing in an omni-channel platform. That's why our adoption is very high. Scava now has great adoption, not just in retail CPG, the same trend we are seeing in banking and financial services and utilities with Rajesh and Mohit. So we are seeing this omni-channel trend that will play out across all industries. Yeah.
And what about the fact that retail stores are now becoming warehouses rather than retail online, because people are using digital to book and pick it up from there rather than, so there's a clubbing of store on the ground which we are seeing. Is that also bringing in opportunities for you as well?
You've clearly done your reading on the industry. So you're right. Some of our programs, Ravi has a practice called the Enterprise Applications Services practice that particularly focuses on converting a regular retailer into an omni-channel retailer, using the store as a fulfillment point, using some amazing technologies. We have not just Scava, but he has a great practice in Sterling, in other order management technologies. We have productized those technologies very well and offer them as a service. Our ultimate goal is, as this industry transforms on omni-channel, on stores as a warehouse, on redundant stores, etc., that along with our software and Ravi's large kind of delivery practices, differentiated delivery practices, we build the ultimate business process experience for our customers so that they can eventually build an amazing consumer experience for their customers. And that is very powerful when you bring people and software together. So once again, we feel very comfortable with the positioning we've taken in the market, the leadership position that we've taken in the market in this industry.
And on the BFSI side, Mohit?
So I think, look, on the BFSI side, this has been an area of historical strength for us. And over time, we have worked to build it, right? So I'll just talk about three things. The first is the work that we're doing to build deep sub-vertical capabilities, right? And this is something where, Ravi and I, we speak, multiple times a day, right? About how do we make sure that we can sharpen our proposition? How can we make sure that we build domain expertise? Because at the end of the day, the domain expertise then translates into a number of areas, right? It translates into capabilities in products and solutions made by other companies, and it translates into capabilities in products and solutions and platforms that we're building ourselves, right? So the first piece of work that we're doing is to make sure that we work very closely with the global delivery organization and the BP organization that Ravi runs to build those capabilities. The second piece is around the trends, right? And again, as has been fairly clear in this discussion and several other discussions, that all of our clients now, right, are looking to build applications and platforms and systems that can adapt, that can respond, autonomously, right? And the future really belongs to, to those consulting companies and those software plus services companies that offer these platforms. And I think I'm very confident, right, that Infosys is the leader in this space, bar none, right, in being able to develop these AI and automation platforms and capabilities in building those digital capabilities, right? So that's the second piece of your question. And the third piece is around the spend, right? And I feel that from a Q4 perspective as well as from a calendar year 18 perspective, the spend prognosis does look good. It does look good. I think compared to the same time last year, clients are more optimistic about their own revenues and therefore their spend. Obviously, cost reduction continues to be a priority for our clients, but unlike previous years, what they're looking to do is to take the savings that they get from run the bank type activities, through automating those, through AI interventions there, and to use that pool of money into transformational programs. So the spend outlook is positive. The key trend is clearly AI and automation along with digital. And from our perspective, we are working very closely together, all of us, to make sure that we can sharpen our domain capabilities, sharpen our industry capabilities, make all of our use cases very relevant, to our client base rather than those being generic.
Thank you, gentlemen.